back with another portfolio update. So, if you follow my stocks at all, which I don't really know why you would follow my stocks unless they're also your stocks, you would know that this past week and a half has been rough and painful and not great. So, most of the gains of this year so far have been wiped out. To be fair, though, I would say it was kind of expected. Almost every single stock, or at least most of my stocks, were on insane runs coming out of 2024 and coming into 2025. So I did do some selling at the tops, which I am grateful for now. However, it is probably a mistake I will not make again, hopefully, where I do not think I sold enough. So, for example, stocks like Hims and Hers Health pushing $70. I don't know why I didn't sell all of it when I was up 150 or 200% or something. Probably more than that, actually. I think I bought it around 25, 300%. Um, Things like that, like even probably 2 months ago now, Saren's Technology, $26 a share, and I only sold 10 shares out of the 70 that I held after putting $250 into it. I don't know, but saying that, I'm probably going to try to sell things better than I have. I do have a couple new stocks in the portfolio today, which we will get into. Is everything updated? Hopefully, I think I did everything. But yeah, that's about it. So big focus coming into this year, I guess, um, even though it is March now, is I need to get better at selling things. And that is honestly a problem that I have been dealing with for 4 years now, where I will hold things and not sell them when I should. And I got to tell you, that is one of the hardest things to learn as an investor, and as just like a fairly active stock trader. I used to do options, same exact thing there. Is not selling something when you should is probably the worst mistake you can make. And obviously, you don't know when to sell, but that's why you put things in in place so that you know. So, for example, the for the past like week, I did not sell off Robinhood, Hims and Hers Health, Super Microcomputer, and I did sell off some of Super Micro and Hims and Hers Health, which I am grateful for, and I'm glad I did. But the belief there is long term gains. And I do believe in that. And I do believe that long term, the stocks will be performing very well, especially Super Microcomputer, and actually the companies that I just got into over the past few days, which I'll be going over in the portfolio later. But um, long term gains are amazing and great and fantastic and all of the descriptive words that I can think of. But when you are up 200%, 250% on a company in 2 months or so, I'm going to try to get the actual numbers here for super, or not super micro, Hims and Hers Health. Now, let me see. 6 month chart on Hims and Hers shows over 150%. Um, that is not including when it was at $60. So I bought, I believe, around $19 to $20 a share, and it went all the way up to 60. That is a 300% gain. If that ever happens again to me in that short of a time frame, you will absolutely see me selling 80% or more of that position. And to be fair, I did sell half of Hims and Hers, which is awesome. But I did not do the same thing with Super Micro. So Super Micro, I think I bought at around $30 a share and kind of averaged down as it went into the high 20s, and it hit $60 a share. That is a, for me at least, it was an over 100% increase, and I sold a third of my position. Now, to be fair with Supermicro, that is a stock that I long term believe that their valuation is going to be there. It's going to be a much larger company than it is now, and so that one I'm not too worried about. Hims and Hers Health, though, I think there are definitely some valuation issues at the moment. I think long term the value is there, but at the same time, is it there at $70 a share? No. Is it there at $40 to $50 a share? Yes. So when it was at $70 a share, definitely should have sold off a lot more than I did. Yeah, that's about it. But to be fair, I sold half, so that's not really the big issue. Now, as I'm just monologuing for 6 minutes, I guess, no real plan for the video, by the way. I will get into the actual portfolio numbers at some point. But one other one is Celsius. If you've been following the channel at all, which probably about four people have, Celsius blew up the other day, well over $30 a share. And that is my largest holding, and it propelled my account to the highest values I have ever seen in my account. Now, any reasonable brained person would think, okay, so you sold your Celsius. Nope, I did not sell one share. And while that does sound pretty stupid, and looking at it now, I would say yes, that is pretty stupid. I also believe that long term Celsius does have a ton of value. And the fact that its valuation, by the way, I keep looking down to look at charts on my phone so I can make actual informed um, speaking, whatever the word is there. Um, Used to be at above $80 a share. It's at 25 right now. So the last little pop that we saw went up to 33. So will it get back up to those higher valuations? It wouldn't shock me to see it. I think Celsius has a ton of growth potential. But at the end of the day, when you have your largest stock, which you have been down on, for me, I was down on it for probably well over 2 or 3 months. And it goes up 35% in one day, and you're suddenly up 15% on it, should probably de-risk some of that position, at least 25% or so. And I did not do that. So I would consider that to be a pretty big mistake. Either way, it's fine. Another one is Robinhood. However, Robinhood is, again, another super long-term hold that I'm considering. Um, and also, I just don't have a lot of Robinhood either. When I did have an opportunity to buy it, I only bought 10 shares. So that did appreciate into an okay sum of money, where right now that's worth about $500. However, they also saw $65 a share, and now it is at 50, and I did not sell any. But the argument or justification with my personal Robinhood position is I already do not have a lot in the company. I wish I did. I should have bought more when I had an opportunity to, but I did not, because at the time I was a lot more hesitant about buying stocks in this portfolio, which now I am really not. Um, but either way, very solid profit with it. I am up well over 100% either way. But that's just kind of another one where $65 a share after I bought right around probably 18 to $20 a share. So yeah, and that's also within like 4 or 5 months time, which is crazy, 300% growth or something. Did I buy around? I definitely bought in the 20s. I think I bought in the low 20s. So either way, 300% gains is crazy in a couple months. And now that I have monologued for about 10 minutes, I will actually get into the portfolio. So let's see what I added. So looking at the numbers here, I did add a few more things here, like my total return in the portfolio, simplify the percentages just because why do you need to know hundredths of a percent? Made this number bigger because, yeah. And then also I added my average yearly return, which to be fair, I probably shouldn't even include 2023, because while the account was opened in 2023, I just had a little bit of cash in a money market and that was it. So do I want to I mean, I guess I should, but yeah, I don't know. Um Either way, year to date, we are now only up 6% after being at a high of around 14% year to date, which isn't great. Am I upset? Not really. What at least my mindset with holding things long term is that, you know, I'm confident in the stocks that I've purchased. So at the end of the day, if things drop, it's kind of whatever, at least in my opinion. I did buy new companies and I did not put them in here. Now, why did I not do that? I do not know. But what I can do is go over to the good old TradingView watch list and show you guys the new companies I bought. So first of all, Red Cat, First Solar, and I think I talked about Trade Desk in my last video, but I am still going to include it here because this is what I'm going to consider to be the next generation of the portfolio. So season one is over. That was basically um, Hims and Hers Health, Super Micro, which to be fair, I'm still holding all of these, so I don't even know why I'm using this as an example. But essentially, I want to start uh, making new companies my larger holdings and selling off companies that um, were my larger holdings, but now I've kind of recognized gains from them. But anyway, looking at all three of these, all of them, as you can see, are down drastically over the past few months. And I don't know if people are aware of the way I invest or not, but essentially, if a stock chart looks like the opposite of what you're looking at right here, I really don't even acknowledge it. If the company is up, why would you buy it? That's usually, I mean, obviously, if there's a ton of value that you're seeing, then go for it. Like I bought Robinhood in 2023 after it only went up that entire year or something, or 2024. I bought it after it was only going up. But that was a company that I previously had invested in and was watching for a long time. So a little bit of a different situation. But anyway, all three of these companies are down a ton. I think all of them have insane amounts of value. Dollar General is reporting in 2 weeks, which is awesome. I hope that is good. But is the ADHD kicking in? I think it is. What else do I want to talk about? So these are the three new companies. I could put in the information, but that would probably take like 5 minutes. Um, the information on the portfolio, by the way, that would probably take a couple minutes to the point where I really don't feel like doing that um, right now. But what I could do and what I will do is pause and just do that because why wouldn't I? Be right back. All right, so I just spent like however long, 5-10 minutes, completely reworking a bunch of stuff. So took out the ETFs and stuff out of this because it was made no sense for it to be there. First of all, I don't know why I had it there, but anyway, I fixed some of the calculations here because they were very messed up. Year to date return is now just under 7%. So we're not doing as bad as I thought. And then ETFs are here now because I'm never really going to change them at all. And it makes no sense to have them in with my individual stocks because it doesn't really show my actual portfolio breakdown. So this shows the portfolio breakdown much, much better. And let me actually just make sure that the data range is correct. So yeah, see, it's not even D20. There we go. Okay, so that literally just added my three smallest companies. But anyway, um, you can see the new ones here now. So First Solar, I bought 2 shares. Red Cat, I bought 20. And then Trade Desk is also here at 5 shares. So um, again, I want to start rotating out of these companies. I would say especially the top 10 or so and start filling in with some of these smaller companies that I've had kind of for a while now, but haven't really put much into. For example, Snapchat. Um, a lot of people do not like Snapchat stock, but let me just pull them up here. So I don't really know how to explain Snapchat that well. So first of all time, or at least from 2017, I don't know if that's when they went public or not, but all time they're down 50%. They're down this month. They're down the past 3 months. They're down the past year. And I like the company. And actually, let's just get into some things here. So I like the company personally. Just to preface again by saying that sales growth is solid, debt is not crazy. They're nearly at profitability. I would say probably within 2 to 3 years they'll be profitable. Their valuation is crazy, considering they make over 5 billion, estimated to make over 6 billion in sales, and their market cap is at 17 billion. That kind of multiplier doesn't happen very often, especially with um, I don't know the right word for it, like kind of trendier companies. Yeah, I don't know how to explain that very well. But 2025 also, revenue per user is estimated to grow a lot, from what I could see, at least quarter over quarter. So if those numbers can kind of outperform and really beat on what we're seeing, I think this would be a 40 to 50 billion dollar company personally. Um, that's just my opinion, but yeah, so that is a company I would like to have a larger position, as well. First Solar is probably going to be a larger company in the portfolio as well. You can see I really reduced how much HIMS I had. That was cut in half completely. So that will probably now be just a complete long term hold. Um, but one that I'm definitely going to look into selling fairly soon. And just to be clear, um, almost everything that I sell is not because of lack of confidence in the company. It is more so because of needing money to put into other companies. So, for example, I want to sell some of my Celsius position. I still expect Celsius to perform excellently. It's just that I want to put that money into other things. Um, and those other things have a decent chance of performing just as good or better, but I want to be exposed to those other things. So Chewy is probably going to be sold off fairly soon, not because of, again, any like negative reason with the company. Let's just go into it here and I'll kind of show what I've been seeing. So since I have bought Chewy, they have essentially only gone up. And I do think that they will continue to do that, but it's just I have too much money in it to where I feel like I can put it into better positions. Once again, it's just kind of I feel like I can put it to better use. Also, which I'm going to include this in the uh, what's it called, stock analysis videos that I make. Um, I have a indicator now that shows their total employees, which is pretty cool, honestly. So, for example, one of the interesting ones I've seen was actually for Hims and Hers Health, and they have been blowing up their total workforce over the past 2 years. And honestly, if you use this as an indicator for stock growth, I mean, they increased their workforce 60% in 2023. Since then, their stock price has gone from single digits to all the way up to $70 a share. And I feel like that is just a super early warning sign for like, hey, we're expecting to massively outperform. And it just doesn't get really talked. I feel like I never hear anyone talk about workforce growth. You almost always hear when a company is making cuts to their workforce, but when it's growing, I feel like I don't hear about that very often. Um, Another thing, let me see. So I just bought Trade Desk, and if we look at them, their workforce has been growing consistently every single year that they have available here. And in 2024, it grew by 13%. So now that they are at the exact same price point that they have essentially been at since 2020, looking at 2020, their workforce was less than half of what it is now. So I expect there to be a decent amount of long term value added here. So the fact that the price is now this low, um, just makes it seem like even more of a good buy. I didn't look at First Solar yet, but let's see. Oh, sorry. First Solar, but let's see what they have here. So kind of a similar thing. To be fair, their workforce used to be a lot larger, but I mean, COVID is COVID, and that's kind of just what happens. Um, and also, solar companies during COVID happened as well. So, if we look here in the past 2, 3 years, their workforce has been expanding massively. And in that time, they are now at the exact same price that they were at in 2022, which is coming off of when they were reducing their workforce. So, I just see that as a fairly valuable indicator. Also, the last time we saw their momentum index, which this is essentially RSI, I'm going to be honest. It's a little bit more intuitive, at least in my opinion, but this is essentially just a momentum index. The last time we saw it this low was in 2023, and they went from 150 to just about 300 in that exact time. The time before that, they were at right around 80 to $70 a share, and they went on their entire 2 year run, topping out right around 230. So now that we're at this level again, it looks pretty good. To be fair, though, both times that they were in that this level, they hit it and then continued to kind of drop for a few more weeks. So, can we expect some short term pain from First Solar? Probably. But overall, we'll just have to see. So, this video has now gone on way longer than I was expecting it to be. And it's mostly just because I was monologuing about my own mistakes, but hopefully that is the lesson learned from this video. And also, just the portfolio is still doing okay, 6.6% year to date so far. Should I have locked in a lot of those gains that I had and probably been up still at least 10, 11% year to date? Yes. But is that a lesson that I have learned now? Yes. And with that, I would say the value is still gained um, either way. So, saying that, I think that's where I'm going to leave it here. I could go into the dividend thing, but I mean, it was a rough week. So, I don't really feel like going into it too much. So anyway, that's all I have for today. Thank you so much for watching. If you did, this is probably well over 20 minutes at this point. I don't really know. I didn't look. But yeah, that's all I got. Thanks for watching. Subscribe if you want, and I will see everybody in the next video.